Hi guys, this is Mark Shawzin, the pattern trader here. When I started the pattern trader in September 2015, my mission was to educate traders on how to capitalize on the bigger moves in the market, how to identify and capitalize on the bigger moves in the market. What you're seeing before you is a record of my weekly trades with open position profits of 1,721 pips thus far on open positions. Now, most of these pips have been generated on the heels of a pair that I've been advocating the long side since October 2016. You can see that on the weekly trades, we have currently two positions open that collectively have over 1,200 pips open profit currently. These are on my weekly trades. I'm going to show you a screenshot of my daily trades, and there is another 1,500 pips of open collected profits thus far. So right now I'm sitting on positions in a combination of daily and weekly trades that collectively are showing gains of over 3,000 pips. Now I've also included the trades on a live platform. So many times there is misrepresentation that you see, so I wanted to show these trades on a live platform. Here's the current open market price of the trades. This is where I got in, and these were the dates that I got in. I'm going to show you an email in a moment of these trades that went out to thousands of our members around the world before these trades were triggered. So again, it's my objective to identify and capitalize on the bigger moves in the market. I'm looking for 200, 300, 500, 700, and 1,000 pips or more on an individual trade. And it's actually my contention, unless you find these bigger trades, it's very unlikely that you're going to be successful over the long term. This is in contrast to what most traders are doing, where they're searching for 10 or 15 pips on an individual move, looking at a 5 or 10 or 15 minute price chart. So again, if you're looking for a 10 pip profit, you also have to risk 10 pips, or if you're looking for a 15 pip profit, you have to risk 15 pips. You also have to overcome the broker spread and the volatility. And again, trying to make one-to-one risk reward on your trades requires you to be 80 to 90% successful over the long run. You can see that I sit in trades for weeks and months, and in this case I can lose 50%, 70% of my trades and still be very successful over the long run. In this graphic, I'm looking at my current open trades taken off the daily charts, and again you can see the big winner is in the pound New Zealand dollar, and I currently have an open position profit of 719 pips for a collective profit on the daily charts of 1,152 pips. When you add it to the over 1,700 pips that I'm now sitting on the weekly trades, you're looking at collective gains of over 3,000 pips just in the last couple of weeks by trading my long-term pattern recognition methodology. As I indicated, I've been yelling from the rooftops since October 2016 to anybody who would listen to me that the pound New Zealand pair was going to turn in a dramatic reversal from a huge multi-year downtrend into what I thought would be an enormous bull market based on the technical patterns that I watch. This is an email dating back all the way to December 2016, when I was already starting to accumulate a position. A day earlier, I accumulated a position at 176.87, and on this particular day, I was advocating accumulating. In fact, my email was called GBPNZD accumulator, another position at 179.51. Here's another email that was sent out to thousands of my members around the world, sent on March 5th, 2017. And again, I recommended a buy stop in the pound New Zealand based on a huge weekly double bottom and several price key reversals that were occurring in the market at that time. And I said all the way back last March that prices can effectively only head much higher from current levels. On this individual trade, we made over 900 pips buying pound versus New Zealand dollar at 175.09. In a follow-up email after buying the pound New Zealand dollar at 175.09 on April 2017, I sent a follow-up email to add to the position. You can see in this email I said I'm currently open a long position at 175.09 established the month prior. I will sit in these trades for weeks and months at a buy stop of 179.31. We ended up making 556 pips on this trade in addition to about the 900 pips made on an earlier position. Collectively made over 1,500 pips in the long pound New Zealand earlier this year. In an email dated October 23rd, I said I continue to favor the long side of most pound correlated pairs. I wanted to say since the beginning of 2017, I've been consistently and unrelentingly alerting pattern trader members to a serious weakening of the New Zealand dollar and to the virtues of staying on the long side of the pound versus New Zealand dollar. I wanted to say since last February, I have vociferously advocated investors tuck away a pound New Zealand long position with the view of holding this position 12 months or longer. So as you can see, I've made thousands and thousands of pips on the long side of the pound New Zealand dollar, currently holding positions with an excess of over 3,000 pips in open market gains, principally on the back of the pound versus New Zealand dollar currency pair. Now I'm going to attempt to describe and explain to you why I have been so excited about the potential of an enormous reversal in the pound versus New Zealand dollar. In this chart, we're looking at the pound versus New Zealand dollar currency pair on a weekly chart. And all the way back in October, I was alerting members that we were about to see a huge turnaround when I saw this price bar. This was a key reversal where the market made a new low and then closed at the high of the week. You'll also notice the range of this bar was over 1,000 pips. And it wasn't only that key reversal, but where it occurred, right in this neighborhood of a second bottom at the 167 price area. Then when prices curled around to make the second bottom, I knew the game was on and I was staring at a double bottom price pattern. A double bottom looks just like it sounds, where you have one attempt at a low, it bounces off the low, retests the low, and when it successfully goes through there, we have what we call a neckline, which is simply a line that is drawn through the entirety of the pattern. Once this double bottom went through the neckline, it confirmed what I was looking at, and the game was on. And for the last 12 months, I have been unrelentingly advocating that investors tuck away a long position for several months or even several years in the pound versus New Zealand dollar. You can see more recently, we came back and retested lows. We created the second bottom, or this rounding bottom, if you will. And when it came through the neckline this time, then the game was on. I started getting positions on here and all the way through this uptrend. Presently, I'm holding gains of over 3,000 pips long pound New Zealand. You can see in the current week we had a 500 pip range from low to high. We're presently trading close to the high of the week at all-time new weekly highs in the pound versus New Zealand dollar. Notwithstanding the fact that we've seen a 2,600 pip rise since I started advocating getting long the pound versus New Zealand dollar, based on this double bottom price pattern, I think there is a lot more to go in this pair, and I can see this thing going much higher, and that is no exaggeration.
My name's Greg Spicer. I've been trading for about 3 months, so very much a newbie.
So my previous experience to Forex was getting a trading account started and losing 55% of it in a week.
I'm from Jacksonville, Florida, and I've been trading for probably close to 20 years, but only recently in the Forex market.
Southern Ontario, in between Toronto and Niagara.
My name is Nashir Jiwani. I've been training for about 3 months now.
Started earlier this year, like March kind of thing, so 7 or 8 months.
Well, it was pretty terrible. It took me quite a long time to realize the proper sizing of positions. I kind of wanted to hit a home run from the get-go. Lost quite a bit of money. early on.
I was very alone. I don't know whether am I on the right track. Do I have the right understanding on Forex?
I understood the patterns and different things like that to look for, but I didn't understand the emotional and mindset side of trading until my own money was on the line.
I signed up with Mark almost right after he started, so November of 2015. So my issue then was that I would take his trades and then I would take my own. And his were so much better than mine. So
The biggest thing is psychology. It's learning me that, or teaching me that I don't have to trade every day. I don't have to sit and stare in front of my computer and look for trades. They're there. You can easily find them daily. Spend little time looking at the charts and then set it and forget it.
So I made the investment without planning on doing any trades with Mark for, it was probably 4 or 5 months. I just wanted to educate myself before jumping back in.
Mark's daily emails really helps me a lot, and the Friday webinar clears my doubts as well.
That's what I appreciate about Mark the most is knowing how to guard against your own pitfalls in yourself and put things in place to protect yourself.
He's a very genuine guy. You can tell he's very passionate about the subject, obviously highly skilled. So we're hoping some of it rubs off in terms of the theory and the practice. It certainly fulfilled my expectations.
When I found Mark, I was also a little bit skeptical. It was because through emails. But as I got to know more and I gave him a try, I never regretted. I felt like the money was all worth, and Mark was so dedicated.
So that's when I started following Mark, and then slowly I became an patented or accelerator member. From there I became an elite member.
I need to do the homework. It's not something that's just going to come easy. It's just like dieting, really. It's, we all know what we need to do to lose weight or to get in better shape or to learn a new hobby or whatever it is. It just takes time to do it, and trading is just no different than anything else, really.
He is on the other part of the globe. And that's the most amazing part. When I was in Singapore and he was in Florida, so can you imagine the Friday webinar that I have to attend is actually really out of my time zone. But I really make the effort to attend all the webinar, and I read through all his trades and all his analysis, and I felt like I've never been alone anymore.
Definitely worthwhile. I would recommend it thoroughly.
It was like a hand-holding session every week, and it made me understand the Forex market even better. So I just felt like I'm more in control.
It's a great idea. You will learn a lot. Even if you think you already know it, you'll be amazed how much you don't know.
If you're sick of the 99.5% bullshit out there, come here for the truth. To learn exactly what are the mindsets and techniques that men who are doubling their accounts plus some every year are doing to actually create that. Because it seems like everything that I've looked at out there, it's just marketing hype, and there's really not anything tangible to it. So I am so grateful to have found Mark in this sea of BS.